We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrick. Joining me today is Patrick Karim from NorthStarBadCharts.com and Lawrence Lepard. He's a gold, silver, Bitcoin fund manager from EMA2.com. Pat, how are you today?
Hi, Tom. I'm doing great. Thanks for organizing this. It should be awesome.
Well, it was your idea, so we have to acknowledge that, and I'm very appreciative for you bringing this idea forward. How about you, Larry? How are you today?
I'm doing great. We're looking forward to talking to you and Patrick, who does great charting work. So,
well, it's absolutely excellent to have you both, and I think we'll have a very interesting conversation here. So, I'll pull up the first chart that we're going to have here. All right. So, Pat, you were kind enough to send a bunch of your charts over, and we have some of your partners' work. Kevin Northstar, Kevin in here, Kevin Wadsworth. So, Pat, why don't you start by explaining to us this chart?
Well, what's unfolding right now, I love long-term pictures, and I really want to get a grasp of where I am, like in the cycle. Am I buying cheap? Because it's always that longer-term macro, whatever's happening, whatever the reasons, you want to be on the correct side of it, because if ever there's a counter trend, you want to make sure that that's actually a counter trend and you could buy that dip and that the eventual price action should swoop you upwards. So this, you can't go wrong with ratios. A ratio, it doesn't tell you necessarily which direction an instrument's going to go, but it should tell you where capital flows are going, which one should outperform the other, or which one should underperform less the other. And nothing better than the silver versus the Dow representing US equities since the 1922. And right now, what we see is two different type of structures. So on the left side, pre-1960, late 60s, we had a falling wedge, like a huge 40-year falling wedge going down. That broke out. When that breaks out, I call that like a paradigm shift. Something's happening. The market's saying, hold on here. Something's changing. Either there's inflation coming, price earning ratios for US stocks, maybe they have to go down. And then after that, for a couple of years, you had retests, but above that breakout line. So people could say, it's the end of that paradigm shift. But if you take a step back, you could, if you're patient, those are actually probably buying opportunities to buy more silver versus the US equities. Doesn't mean silver can't go down, but you're buying closer to a technical bottom, even if you're making those lows that are touching that falling wedges descending trend line, right? You're right above it. And then after that, if you were positioned correctly at any moment, you see this violence in the 1970s where silver drastically outperformed the US equities. So even if the US equities, they stay flat or went down 10, 20%, because of inflation, nominally, they were tanking. You were losing purchasing power. You were losing. But if you would have prepared properly, you just see silver, man, protected your wealth there during that period. So that's like the left side. But right now we're having different type of structure. So post 1980 peaks, where we're being in disinflation, where US equities have been pretty much beating hard assets. But now we have a bottom carving out. So probably like two cups. The second one's starting to turn higher lows, very bullish. And right now, if you want a low risk, high reward opportunity, it's at these moments right now. So this is probably, I think, maybe like a quarterly chart or some higher time frame. So yes, you could buy now silver or short the US equities, and silver could go down a little bit. Yeah, these are 6-month closes. So you could have a good drawdown in silver and still close up that 6 months, that semester, and still be that pattern still be intact. So I don't see, like, in these years right now, like, I know traders, they don't like, they want to know, like, I want to know when I'm going to be a millionaire tomorrow, but never short this type of situation, because you're going to get in trouble, because that formation, it really wants to start turning upwards. It wants to test that line there, that horizontal trend line that's right above linking those two cups. It's attracted to that, and it wants to go there. So if you had a choice, go buy. This is a sign to buy the weakness in silver, because right now it's versus the Dow, just equities. This is what the chart's telling us right now, that there's a shift from capital flows from U.S. equities towards silver. And of course, I just added a stock RSI, an indicator, just to see where I could be overbought on the longer time frame. And you see, we're just transitioning into towards a bull power zone, and we're not even in the bull power zone yet, and it could stay a long time. Previously, in 2003 to 2011, it stayed in that bull power zone for 8 years, and we're just approaching it, guys. It's so early. It's like I'm too early sometimes, but we're not that early. So charts do help you, and you can see right now we're just turning the corner there for silver.
So Pat, when we're looking at the stochastic RSI, do you look at maybe when we get that crossover of what are the two lines representing there?
Well, the stock RSI is actually the stochastics of the RSI indicator. So it smooths out extra noise. So already you have the RSI, which I forget how they calculate it, that gives the strength of the instrument, its movement within itself. And that's the stock. So it's another calculation on top of that indicator. So it avoids having the up and down, like an oscillator usually goes up and down, up and down. It really smooths out and it gives you signals. But like Kevin says, it's how did it behave, the price action behave previously when the stochastic crossed over into the bull power zone. And then after that could give you an idea of where the price action should be maintained or where it should hold. Has it been in the bull power zone for 8 years? Then you could say maybe it's not time to buy. Then you look at the price action if you have some type of topping pattern. So this is just a situational analysis to tell you where you are in a cycle. And it's telling me right now we're much closer to the beginning of a new bull trend in silver, gold versus U.S. equities. So that's pretty much the takeaway. Any indicator, I could have put the MACD or any other one. Doesn't really matter too much. It's how did it behave previously, and what type of clues can it give me for the going in the future?
The only reason I was asking is because when we get this, something that has been called before a death cross, I was just wondering if that was giving you any indications for getting in or out as well to try and trade that. But typically, as you like to say, you like to look at a more longer term trade like that, or not necessarily trade, but actual investment, right?
Yeah. Look, those crosses on the smaller time frames, it could be the 2008 crash. It could be but you see how the 2008 crash or the March 2020 that happened in the blink of an eye. You can't even see it on these charts because the macro tidal wave is so much stronger than a sell stop hunting or whatever, like daily news, CNBC tries to pump you. Mm-hmm. A small cross like that is just a blimp. As long as you're in a power zone, you're in the region where the macros, they're forcing people to close their short positions on silver because, I don't know, there's inflation or there's some reasons forcing all these guys to close. They have to go long. Then that's pretty much like the type of information I could go. Maybe Lawrence has maybe some insight, like what's actually happening when people decide to buy silver versus the U.S. equities. Sorry, Lawrence, put you on the spot.
No, that's fine. I mean, I think, this is a beautiful chart, and it tells me that, the trend away from, fiat equities and fiat debt. I mean, that's not shown on this chart, but in general, the trend away from fiat into sounder money is well underway. And it really kind of started around 2000 because you get that nice run up into 2011. And then they put in Operation Twist, did a bunch of other things to hide inflation for a while. But it's obviously come back. And we can see that in all the things the government's done, the steps they've taken. And fiat's in the process of failing. And of course, when that happens, silver, gold, and Bitcoin are all going to do fantastic. And I mean, this chart's a thing of beauty. Anybody who has a background in technical analysis, you buy the sound assets off of this chart. It's very clear.
I almost want to say, even for people that don't have a background in technical analysis, you can see we're clearly, like, this is maybe possibly we're cherry picking data, but this is a pretty objective point of showing how, in this zone here, we're approaching this bull power zone, as Patrick was saying, and we're right near a bottom. So it doesn't make it it doesn't make sense why you would want to be in
right.
in
Well,
equities at this
and
time.
also recall, because this is a ratio chart, I mean, it's not only silver's going to go up, but on a relative basis, the Dow is going to go down.
Mhm.
So you can get that line moving upwards with a collapse in the Dow as well. And by the way, I think that's part of what's held gold and silver back is that, people have been chasing the shiny object, which was, U.S. stocks, particularly the FANGs and the internet and Amazon, Facebook, and all those kinds of stocks. I mean, people have done very well there in those stocks for the last 6, 7, 8 years, and they're all starting to roll over and they're looking tired. And so I think that they're not the place to be on a go-forward basis. But my guess is the market hasn't entirely figured that out. And one thing that's true of all markets is they tend to be trend following, and people tend to go to where they think they're going to get the best performance, and it becomes self-fulfilling. And so I think as the U.S. stock market starts to perform poorly, and they see that gold stocks and gold companies are earning record profits, they're going to are going up quite a bit. They're going to say, "Oh, I get it. If I want to make money, I've got to transition from these traditional stocks into sound money stocks." And that's obviously what I would pose that anybody do with this setup. It's quite obvious to me.
And even if you're not thinking about it as particularly buying something that is a sound money stock, Larry, it is possible that you just get that trend of following and that capital really rotating out of where it's not being respected and into somewhere where it's.
That's right. I mean, it's also helpful that in general, on a lot of metrics, the base U.S. stock market is still quite overvalued, and that a lot of these sound money and commodity stocks are still very near their all-time lows. They're very beaten down, and so it's classic. You buy that thing that's cheap, and you sell the things that are expensive. And so I think that I certainly see in my fund and investor groups that I deal with, a strong trend to go in this direction and say, how do I protect myself against inflation and currency debasement?
Mm-hmm. Excellent. All right, Pat. Inflation adjusted silver money supply.
Often, sometimes, chart traders, we just look at a chart and we're agnostic. But anything I could chart, so even something that's fundamentals, let's say money supply, if I could get my hands on data, I'll be super happy. And here on the top line, you could barely see it. It's that's how slowly the money supply has been growing. You can't see even the spikes. I think in the 1940s, the money supply exploded for World War II, and you could it's like a tiny blip what happened still even today there. So it's kind of hard to see. But if you look at the distance from the 20-month moving average of money supply, so that means how fast it extends away, because they printed a lot of money and then it spikes away from its long-term moving average, its 24-month moving average. That's your edge. That's something that the market has to price in eventually. I've often seen there's a lag. So there's a money supply explosion, and then once that explosion tops off and it starts dwindling down, that's when the market, all those effects of that money supply show up, maybe in the cost of living, CPI, and wherever that money, the bucket, Tom, maybe you'll talk about your bucket analogy, but the money eventually has to seep somewhere. So every time we had explosions in money supply, so you see that with that 24 distance moving average, we had great runs in silver in the 72, and the same thing in that pre-80 bull run. It was the rate of change, the explosion in money supply that the market had to price in that created a shockwave. And right now, if you scoot over all the way to today, every time I look at that chart, I get shivers. I'm having shivers right now. Jesus, holy Moses, look at that explosion from that 24 moving average. I don't know, in 6 months, when that starts tapering off, it's going to be crazy what's going to happen in there. Your bucket's going to overfill. Money has to go somewhere. Mm-hmm. And I just, then after that, I put the silver chart at the bottom, just the inflation adjusted silver at the bottom, just to see where I could start slowing down. But it's kind of mind boggling what just happened recently. Never in history have we had this fast an expansion in money supply M2. I used to use the M1. Some people told me it's wrong, but anyways, M2 have my hands on it. But as a TA guy, that's a clear breakout in money supply expansion. And maybe somebody could weigh in on, is it going to go even higher? Or is it done, the money supply explosion there?
My opinion is it's going to go higher. And the reason it's going to go higher is that when you've got something going like the system we have going, you have to either inflate or die. And the alternative is an enormous depression if they don't continue to print money to finance the government and, support economic activity. And so, well, it's I think somebody at the conference I was at this weekend said the money supply has never grown this fast, as you pointed out, Patrick. I think it's 40% in the last 12 months. I don't think they're even done yet. And, the Fed balance sheet's in the 28 trillion region. I mean, I think it's going to be 100 trillion, easily within a couple of years. And so what's going on here really is dramatic and unprecedented. And, it's actually rather stunning to me that the metals haven't reflected it more, that we've had this 9-month period of kind of peace in the metal prices. And that's still a tribute to the way they've got them locked down with paper and all the other things they do to manipulate that market. But, eventually the market trend will reassert itself, probably is in the process of doing that now. And, we're going to see explosive upside in gold, silver, and, other forms of sound money. So, and this chart just emphasizes that. I mean, it really is stunning. The monetary experiment that they're running is stunning in its size and scope.
So just to kind of clarify, my analogy that Patrick was talking about is that the way I'm thinking about this explosion in money supply is almost like a sprinkler, and you need to basically put buckets out to be able to try and absorb some of it, to try and soak up some of it, and to counteract your inflation. And obviously we're trying to identify places for those buckets that seem undervalued rather than overvalued, like perhaps US equities. Are you guys ready to move on to the next chart?
Yeah.
Okay. All right. So we've got gold's weekly log chart here, Patrick.
So another way of, we often talk about the COMEX and open interest. So there's a whole bunch of data we could get off the CFTC, I think, the website. And I just look at the open interest and how it tracks gold prices. So when there's an explosion in open interest, it amplifies the trend. So when the open interest exploded back in 2019, then we had that nice run in gold that brought us all the way to those all-time highs. And gold was like sniffing all this insanity that's going on now. Like I think around the Powell pivot, gold put in a bottom and it said, look, there's enough craziness happening. It just started moving upwards. But eventually there's like a reset that has to happen in open interest. And as long as a price action doesn't crumble when that reset, where the open interest, people are closing their positions, once that, I see that as a fuel reservoir. So right now, sentiment's slow. Nobody wanted gold up to recently. It started bouncing back up. There's so much room for open interest now to go back high, but right now it's going to go up. It's from a higher low in the price action, even if the open interest resetted to pretty much a bottom that it had even in 2015. And I always, again, I put at the bottom, I put the MACD of the open interest. And just to look at fractals, at chart structures or like violence in rate of change, to see that's our opportunity as traders, is you want to see violence of rate of change and you want to catch that. I know sometimes like we're waiting for, if we catch it too early, we're waiting, we lose patience, and then we go look at like the girlfriend next door. But right now it's super cheap. If gold doesn't crash down at this moment, if it has its best chance right now to go to all-time highs and higher. If it doesn't do it now, it's over. It's like a 2013 top, like this. It's over for gold now. It's going to go hibernating if it can't do a new all-time high. But just look at that MACD. The open interest just violently dropped. Price action stayed higher, and I just see that as crazy amount of fuel to drive upwards. It has the same type of structure you could see in 2009. From super high, gold gets extended in open interest to all the way down to that lower line. I see that support at the bottom. Man, I'm scared. Like if this goes hand in hand with the money to supply, and Lawrence thinks we're going to get even more insanity in the M2 extensions, and just that full reset in the price of gold in open interest. I don't know, man. It just seems like a crazy move is baked into the cake. So until that open interest re-explodes upwards and retouches that upper line where I say gold's extended above this line, then again, it's either you think gold's going to drop is going to crash, or the low's in and there's only upside from here on out.
Now this is another chart which really is a thing of beauty. I mean, notice the way those MACD lines on the on the open interest down below. Just notice the size of those swings. I mean, how violent it went up last summer. in 2019 and last summer, and then how violent below it it's gone on this correction here. And, that's going to turn around. And this is because, we are in the process of watching fiat money, get destroyed. I mean, we're in the process of watching it go away. There's a good chart on Twitter that Dan Oliver from Mermican has put up that shows the moves in gold during the Weimar Republic, and as the Weimar mark was becoming worthless. And that's big time volatility like this is an indicator that something's going on. And I think what's going on is fiat's failing, and we're gonna basically have a very serious inflation, probably a hyperinflation, and that's what these big swings are telling you. And so in this kind of market, you don't want to use a lot of leverage when you've got that much violence going on in the moves, and you want to, if you can be disciplined, you want to try and take a little off when things have gone really well and you've got a big gain, and like last summer, and I was selling just a little bit. And then you want to start buying the dip heavily. I started a little too early on this time around, but particularly when you're at right now, I mean, this would be one heck of a time to enter, this trade, because it looks like we've kind of hit the bottom, and we're about to take out that trend line on the MACD change. And man, when that happens, I mean, I can see at some point in time, I believe that gold is going to get through. I mean, we're 1950 is a critical area, 2000 is a critical area, the round numbers. 2030 is last summer's high, I think closing high. We take those numbers out, and this thing is going to get really, really interesting and exciting. I mean, the last time gold was at 1900 was 2011. That's 10 years ago. And then it was last summer. I talk with people in Toronto a lot and others that follow gold very carefully in the mining space. And, they're all of the view that, well, this all happened because of COVID. And now that COVID's over, everything will get put back together, and we'll have transitory inflation. Life's going to go back and everything's going to be normal again. So, they're still building mining models at $1,500 gold. We're never going to see $1,500 gold again. That's a joke. What we're going to see next is, 2030 gold, and then it's going to be 2,100, then it's going to be 2,500, and then it's going to be 3,000. At that point in time, it'll really be game on, because people realize we've taken out an 11-year double top has been surpassed, and you could easily project it up to 3,000 or something. And in the area I'm in, which is picking the gold stocks, I mean, I can tell you that $3,000 gold is going to make the gold stocks, basically explode to the upside. It's going to be something to watch. So, as hard as it's been since last summer, anybody who's thinking about, losing their position in this trade is nuts. And I don't know if it happens tomorrow, or if it happens in August, or if it happens in December, but it's going to happen. It's going to happen. I mean, unless the U.S. suddenly gets fiscal discipline, and I think the odds of that are pretty low. So.
All right, let's move on to the next guy here. Silver's quarterly historical log chart.
Yeah. Again, like huge big picture, just to make sure we're on the correct side of the trend. And I put in those are quarterly candles or line closes. And I love putting like my Ichimoku cloud. So that is just like a visual representation of projected areas of support or resistance. And even if I would have removed the price action, just look at the clouds, you could tell where you're in an uptrend, and the thinner the cloud, the faster the uptrend is. And right now where we are, silver's just peaking up above that quarterly defined Ichimoku cloud resistance. That red cloud right now, it's just peeking through, like I call it a weak spot, a thin zone. So there's not much, once it goes up above that, man, it could have any of those previous moves. But when you had the weight of evidence, like my silver to Dow chart, even the gold, the Committee of Traders chart, you see that that's why I'm super bullish silver or gold, or more silver these days. It's just the evidence keeps piling up, that when you're in an uptrend, it's like you're the casino. You bet on the color that keeps coming out. That the momentum the macro tidal waves behind all this, they're not going to stop overnight unless like there's a Paul Volcker or some type of Lawrence said their fiscal responsibility or some macro type of event. The wheels are in motion before COVID. I think 2018, pretty much where the wheels were in motion for this to unfold. And just look at that beautiful pattern, cup and handle just forming out. It's going to be just crazy. And I have a measured move at 671%. So it's on the log scale. I call this my greedy targets. But silver moves when you're denominated in a fiat currency, which is debased like almost exponentially, and especially towards the end game. Then it's okay to use a log scale to have measured moves, right? Because and silver's shown over and over that it's able to appreciate logarithmically. It gives me like a over $200 target for the end of the decade, and that's probably like one of my more conservative targets there. But that's just telling you what's happening behind the scenes, right? It's if silver's just a rock or gold is just a rock, if it's costing you more to buy it, it's essentially your paper money, right? It's losing value.
Yeah, so silver is the cheapest asset on the planet. I mean, silver hit $50 with the Hunt brothers in 1980, and silver hit $50 in 2011, and when inflation was really starting to build up, and then the Fed figured out how to hide it. And silver hasn't even topped 50 yet. I mean, gold's over its old all-time high, and silver hasn't even done that yet. So, and it's got more torque and more beta than gold. So, yeah, I see a $50, I see a $35 silver price within probably a month or two, and often it leads gold. And then I see a $50, and then through 50, 200 wouldn't surprise me, which is one hell of a lot of upside from where we are today.
Pat, what are these Ichimoku clouds? How do you calculate them?
I don't know.
I was gonna ask the same question. Actually. I don't know what that is.
Is it just a chart pattern you check off on TradingView?
the Japanese and technical analysis, they've been doing it with rice. That's why it's human behavior. Before the algorithms, before the robots, they were doing the Renko charts and a whole bunch of exotic charts. The Japanese candles, right there, the ones that came up with it. And Ichimoku Cloud, I'd love to give credit exactly to the person in Japan that created it. It does a calculation on current price behavior, and it projects it in the future, and I think slightly off or higher. And it calculates, let's say the price action stays a long time in a certain pattern. It projects, I think, like 26 period. There's like the settings on the top left. Projects it in the future, those quantity periods, either resistance or support, depending where the price action was. So eventually in time, when the price action moves towards, that's people that bought at 50. That's people who are bag holders, right? So if the price action is down and you're running back into the cloud, it's just showing you, hey, 26 periods ago, somebody was actually bought gold or silver at that price, and he's going to want to sell. So the longer you go, let that cloud evaporate. All those sellers, they gave up. They sold at the bottom. They didn't want to tell their wives they lost a fortune. And then after that, the price can appreciate, right? So whenever I hear like, there's manipulation, silver's down. Well, you know what? Thank goodness, because that you could use that to your advantage now. Because the more they manipulate it, the more price action is down. That thing is just going to vacuum up once it crosses like those psychological barriers, right? Because everybody gave up on silver for 10 years consolidating. Who's still holding silver? Except like the silver bugs and gold bugs. Nobody has silver right now. So that's the skewed reward.
Helps define resistance zones. But you also hit on something there, Patrick, that I've seen a lot when you and I have spoken, and it's people's criticism of technical analysis. If you're charting something that is manipulated, then how do you know that is taken into account with your technical analysis?
Well, it is what it is. For every person that's manipulating, there's somebody else who is taking the counter or opposite trade, right? If there's more manipulators or sellers, then the price action is going to be subdued. But eventually, they're either going to want to take profits, going to cover shorts. The inflation rate goes up, and then they can't short anymore because they can't. The cost of borrowing money goes up. There's all these mechanisms that eventually prohibit these type of trades, and they explode upwards. Money supply exploding upwards, inflation, stuff like that. So it's like you try to find technical analysis is going to give you the trend, the skewed reward versus risk in your favor, no matter why the price is at a certain place.
Anything to add there, Larry, on manipulation? No, I mean, I think it's a great question, Tom, and it's kind of one of those mysteries. I think Patrick kind of summed it up. I mean, my sense is the manipulation ultimately will fail, but it can alter the shorter term trend of things. And, but the reason I think technical analysis is valid is that human emotions haven't changed. Yeah. And so there's a certain element of pattern recognition in technical analysis, and you can see these setups and levers, and also a lot of people trade off of it. So it kind of becomes self-fulfilling. I mean, one thing that's going to happen here is, the 50-day is going to cross the 200-day on the prices of both these metals, and all the algos are going to kick in, and it just, a lot of investing now is algo driven. So, you know, the algos probably drove it up, both of them up a little too high last, you know, August. And, you know, they flipped. And then, of course, we've driven it down a little bit too low. And I mean, this is how markets are made, right? But we're clearly in a bull market. You know, we're getting higher highs and higher lows. And I think in terms of the cycle, you know, we don't get near the end of the cycle until either we get a reset or the governments start to clean up their act. And I don't think we're anywhere near getting a reset yet. Nobody wants to do that. None of the elites want to do that. And I don't see the government cleaning up its act. In fact, I think the government act is getting worse. So you know, I don't know what's going to happen in 5 years or 10 years. I mean, I think I do, but it's obviously fuzzy. But I think in the next 2 years, we got some very clear sailing in these markets. Very clear. It's going to be, we're getting into the explosive part. You know, I mean, we've had a couple of good years, but when we take out the all-time high in gold, the 2030 high, you know, this market's going to light up. And, you know, it's going to have characteristics of .com or marijuana or FANGs or whatever you want to say. You know, it's going to suddenly become clear that this is, you know, it's game on in this area. And it'll, you know, long overdue, and be nice to see it happen. And I think it will happen. So
it's interesting that you mentioned that 2-year timeline are you saying that 2-year timeline in precious metals, Larry?
Yeah, pretty much. I mean, I think precious metals, also to a degree in Bitcoin. I mean, I think the sound money bet is we're at the tipping point, in my view, on the sound money bet. The governments have gone too far. The inflation is too embedded. It's not transitory the way they say it is. You know, the interest rates are too suppressed. I mean, the entire bond market is a farce. I mean, you know, all the European bonds have negative yields, and the U.S. bonds, you know, have a suppressed yield. I mean, you know, you shouldn't be. I mean, the U.S. federal government is functionally bankrupt. I mean, it can't. It's not even collecting half of what it spends in taxes, and you know, it's monetizing those deficits. And so, you know, I mean, we've got a real sound money problem here.
Pat, it's interesting that Larry brought up the 2-year timeline, really, because that makes me think about your mid-cycle lows that you and I have talked about.
Yeah. So some of Kevin's charts there, that gold, at least it bottoms every 4 years, or every 4 years it could have a bottom, and the next one would be due in November of 2024. So you could have a high. You don't know when the high is going to be, but usually gold peaks and then it drops pretty violently. So 2 years, when 2021, 2023, maybe a peak at gold, silver, and then a drop into 2024. You never know if the markets, what I've learned is the market takes more time to do stuff than my imagination. I'm always I feel like I'm always getting heat. Patrick, you keep saying imminent. Well, okay, I'm in monthly or quarterly candles. Like a candle, if I get one or two candles wrong, it's like half of a year or so. But that said, yeah, you can't be too precise. The closer you are to an event, the more precise you could get. But it's a ballpark that we know something, and you will see in the charts anyways. Like moving averages are going to start rolling over. You'll start seeing divergence. Yeah, we'll get clues if it's going to be 2 years or 3 years before like something happens, right? But it's good to know that we're closer. We're far. Like we have still a lot of time to do new highs than setting in a new low.
Yeah, I mean, my view on a lot of this is you just want to be on the right side of something, right? I mean, you don't know how far it's going to go, and we're going to get more data, and we're going to watch. I mean, we could go into full Weimar, and there could be no pullback, but we could go up for a couple of years. The government could take some action to try and mess us up, and you know, we could have a serious pullback and a mini bear in what's a longer term bull. I mean, I think the issue is that money is being debased much more quickly than it has ever been debased in history, and so, with that as a background fact, and then the setup technically in the charts that Patrick is so well constructed here, it just tells you that this is an obvious right place to be with respect to this trade.
All right, Pat, we have US dollar and equity versus silver ratio.
All right.
Silver's greatest entry. Exactly as Larry's just talking about.
Yeah, it's
really trying to pick these entry points.
So this is a 1 month chart. It's a US dollar. So US dollar is the orange line, and at the bottom is the Dow divided by silver. So it's again the Dow versus silver ratio. It's just to show one when they're both confirming a breakdown, something special is happening. So often, like guys said, when the US dollar spiked in the post 80s and it crashed down, silver didn't do anything. Well, when you look at the silver, at the Dow versus silver ratio in 1985, it did not crash down. It was the opposite. It went up. So it wasn't time to go long silver versus US equities at that moment. But in 2000, in the 1970s, we both broke down at the same time. And in 2002, both broke down at the same time. And right now, guys, it happened. They both broke down at the same time. And what we're living right now is, like Larry said, we never know when it's going to go parabolic, this thing, right? When it's going to, and we're in a full bull run and inflation is rampant and there's no pullbacks for months and months. And people, like, they're trying to catch up to the occasion to go long silver versus US equities. Well, right now we've just had the second bounce of that ratio breaking down on the monthly chart. So again, you're on the wrong side of that breakdown line for the Dow to silver ratio. And each time you're touching that line, it's an extra chance you have to go to silver before it really starts outperforming US equities. It's like borrowed time. It's like it's trying to grip, it's magnet. Oh, I want to hold on, but eventually it lets go because the forces are too powerful and it just plummets. And you've seen in the past, the behavior of that ratio, it plummets. When it goes down, it's silver going up parabolically. And even if the Dow goes sideways, you're losing purchasing power because you're in US equities and you're not in hard assets.
Larry, anything to add there?
No. I mean, I think this is a nice pictorial view of what's going on.
So in the sound money vein, we still have one more silver chart here. Yeah.
Well, it's just to show that, again, in the grand scheme of things, when things go crazy, they can really, really grow crazy fast. So this is silver inflation adjusted. And you just look at those spikes. We're so far off those 1980 spikes once we adjust for inflation. Since we have like barely no inflation right now, we're according to the readings. So when things start really picking up there, silver should, there's a lot of room up. You're buying, you have arcs, which are natural support, arcs within arcs. You're another area where it's super, super low risk, high reward. A lot of people are going to be buying on top with those overshoots. So know where you are historically, and you're closer to a bottom than a top at this stage.
And those are yearly candles too, right, Pat?
Yeah, yearly candles. The wicks is noise from smaller time frames. Can't get bigger picture than that there.
Mm-hmm. Yeah, that's a nice cup and handle chart, which is a pretty reliable pattern. Yeah.
Excellent. So I wanted to get some context for commodities as well in here, and this is one of Kevin's charts at North Star. So, Pat, why don't you kind of lead us through what he has here?
Well, this is just like another example that, like, inflation, the bucket money's going everywhere, and you had that violent drop in March of 2020. But it's when everybody thinks it's deflation, it's the end of the world. The charts bounce back violently. So it's like almost like a false breakdown. He has a horizontal dotted line. It's like a false breakdown, and then starting to define a channel, some support. And now that channel that was still descending, the price actually managed to get back above that and then some. And now it's always angles of ascent. So every time you break a trend line, which angled, okay, something's happening. And the more you're breaking more and more horizontal type breakout lines, that's when the crowd starts, starting to make the food starting to cost more, gas, oil, like we talked before this podcast, where talking about oil prices, how they went up, even in the States, they're catching up to Canada. And it's always a battle of hitting resistance, support lines, and fighting through that. But when you take a step back, you just have a beautiful, beautiful base right now, which has a lot more of up room. And the target are those 2014 highs there. That's the end game target there for the Bloomberg Commodity.
Or even much higher. I mean, this is a beautiful chart. And this confirms, investing's a mosaic. You want to get all the different pieces. And so you've got silver and gold, you've got other hard money alternatives going up. But when you got it going on everywhere, when you got wheat and corn and, steel and just everything is going up in price. All commodities are more expensive, particularly after we've had a deflationary period from 1980 to, the mid 2000s, depending on how or where you want to measure, but certainly into the 2000s. And now we're seeing, I remember that March day when we took the plunge down like it was yesterday. And, Jay Powell basically came in and said, look, whatever it takes, we're going to print enough money. And I take them at their word. And the reason I take them at their word is if they don't, the entire economy is going to collapse. And they want to be alive and they want to have political power. So, they may talk about tapering. They may threaten to taper. They're not going to taper. They can't taper. If they taper, the whole world ends. In fact, they're going to have to accelerate their printing. And that's why the balance sheet's going to 100 trillion. And that's why there will be much, much more inflation. And it's just, and this is confirming it. These commodity prices are confirming it. These are huge markets, and they don't move this kind of way and this dramatically and break through critical levels unless something underlying is really important is going on. And what it is they're sniffing the future inflation and the debasement. So to me, this chart does an excellent job of supporting our thesis, our underlying thesis in the silver and gold space.
There is something I've been thinking about lately was, as you mentioned, we've had this really deflationary time since the 80s. And if you look at the most commodity charts, they just continue downwards from there. Do you think that's due to the fact that maybe manufacturing and all of the factors that really go into pricing commodities has just gotten so much more efficient? So how do we, if we look at it through that lens, how do we continue to forecast commodity prices really rising?
Yeah, right. That's a great question, Tom, and a great point. I mean, Jeff Booth has done a lot of work on this. He's written a lot on Twitter about it. I mean, yeah, efficiency does create, deflation should be the natural, occurrence of things. I mean, we should live in a deflationary world. I mean, human beings are always inventing things. They're making things better. They're doing more with less. I mean, that's productivity, right? Productivity means you can make more stuff for less. I mean, think of how productive the U.S. farming is and how, one farmer and some automated tractors and so on and so forth can create thousands of bushels per acre or whatever it is. And it's kind of amazing what we've been able to do. And so, yes, commodity prices should go down. And those innovations aren't going to stop. But having said that, at some point in time, it can go, that trend can go too far. And, and so you reach the outlying limit of where, we could be living in an underlying deflationary trend and still have inflation because of what the monetary authorities are doing. That's my point. And we actually need to have inflation. I mean, ironically, we would have deflation and the economy would really kind of slow down and collapse and be deflationary if they weren't doing what they were doing. But because of all the debt we've structured up on top of it, which is non-serviceable without inflation, they literally have to get inflation. And so they will. I mean, that's, if something has to be done, it will be done. Now, maybe there'll be a deflationary impulse in there. We certainly saw one last March. And that's what argues against being completely levered. And that's what, to always have some dry powder and to make sure that you're not, I think inflation is a lock, but I also think there will be times when it will look deflationary because of, they won't print quickly enough. But what we've seen is that whenever that deflationary, danger surfaces in a major way, they step up the efforts to bring in the inflation. And so I think eventually, they are going to print to the point where they will have inflation. It's inevitable because the alternative is unpalatable to them. So, our job is to take advantage of that.
And Larry, do you mean, let's say, asset price or consumer price inflation, or it's interesting because there's a couple different definitions, right? The Austrians classically define inflation as an expansion of the money supply
and credit
or currency supply. Yeah,
and credit. Yeah, because of credit, you need the multiplier of the credit cycle. I mean, it's not just putting the money on the bank balance sheets, but yeah, there's that type. I mean, look,
it'll be everything, right?
It'll be everything. Yeah, it's a cotillion effect. I mean, the money goes in lots of strange places. I mean, they can create the money. They can't always control where it goes. It chases what's moving. I mean, it recently it chased the FANGs. Now it's chasing commodities. I mean, I'm sure there'll be times when the commodities will slow down and it'll chase something else. It's in a sense, it's about to chase kind of workers and wages. I mean, they've paid people so much money. A lot of people aren't working, don't want to enter the workforce. Think that $15 or $20 an hour is an insulting wage. and so they'll sit it out. And so, the businesses are going to have to, labor's gaining more power, and businesses are going to have to start paying better, if they want to get employees. So, it can come from a lot of different places. It also kind of comes from the psychology. I mean, when, if people, if people feel like there's going to be inflation, then the velocity, I mean, part of what's kept it low over time is money velocity has been low. They've been creating money, but velocity has been low. But, when people, I call this, CSIP, currency, it's psychologically driven, that when people realize things are inflating, they naturally want to spend more money to buy things before their price goes up. And so, of course, that increases the demand, and that makes the price go up more. So and it becomes a vicious circle, right? Mm-hmm. So I saw that in the 70s. That's part of what happened. I mean, amazing thing in the 70s. I mean, there were times when my parents would buy a car, drive it for 2 years, and sell the used car for more than they paid for it when it was new, even though it had 50,000 miles on it, right? That shouldn't happen. Yeah. But it happened because the car that they bought for, I don't know, at the time it was probably $3,000, was $4,500 when 2 years later when they went to trade it in, and so, I mean, that's what happens. And so people who have cash or capital, will try to, I mean, that's what we see that in housing right now, right? You see it in, some people are saying, well, gosh, I know housing prices are going up. I can borrow against that asset. It's a real asset. I can live in it. And that's why you see these bidding wars at the low end of the housing market. I mean, people begin to anticipate. People aren't stupid. They see the monetary debasement, and they say to themselves, okay, I get it. They're gonna screw me. If I save money, it's not going to buy as much. What do I need? What do I know I need in the future? I'll buy it now. And there's your money velocity increase, and there's your inflation, right? Mm-hmm. That's how it happens.
So, in the interest of just in the interest of,
you're going to piss off half your audience here, Tom.
I understand that. I definitely know I can't please everyone, but in this vein of really trying to think about, let's say, assets in different buckets, not trying to be religious about them, and just being agnostic about trying to keep your head above this inflation, as we were talking before we hit record. I know you're a big proponent of Bitcoin. It might not be awesome to talk about right now since we've seen it fall back a pretty reasonable amount, but I think this is instructive to really look at these cyclical lows and highs. And Kevin, again, North Star did a great job, and I wanted to bring this up with you because, again, we can look at this chart, and I think it's instructive to show us where or how this human behavior really works again, right?
Yeah. Before we get into the chart, let me give my kind of blanket statement on Bitcoin. And so recall that I'm, my major mission, in life is to return, the world to sound money standard, because I think fiat money is corrupt money, and I think corrupt money corrupts morals. It corrupts everything. I mean, prices are the most important thing. It's the most important signaling mechanism in the world. It's the most important form of language in the world. It tells people what to do economically. It tells you what your labor and your time and your life is worth. It's set by a price. It's what you get paid in a salary. It's what the cost of your food is. It's all the above. Prices are the most important thing in the world, and the government is fucking around with the prices by setting the price of money at a too low rate, which leads to quintillionaires getting rich because they get the money first before the rest of us, and it's a friggin' crime. And the fact of the matter is that we lose 10% of our saved wealth every year if we hold it in base fiat, and that's a crime. And so my goal is to see us return to a sound money standard in my lifetime. I'm 63. I work out all the time. I intend to be here into my 90s. So I think I've got time to see it happen. All right. With that as a prelude, I've been gold and silver guy since the 80s. Okay. I backed Ron Paul. I ran newspaper ads for him. There's nobody who loves gold and silver more than me. Okay. I am complete gold and silver, still hold enormous amounts of both. And I run a fund that invests in gold and silver. However, I'm also open-minded. And I also was a venture capitalist at one point. And I also realized the world is changing, and the technology comes along, and things can happen that can change the world technically. And, there are a lot of things that I think turn a lot of gold and silver guys off on Bitcoin. And I would urge them to reconsider their thoughts and to not be, butthurt because Bitcoin has recently trumped gold, or butthurt because some of the people who are in the Bitcoin space are obnoxious assholes, or, butthurt because, it's not a physical thing, this Bitcoin thing. But money originally was always just a ledger. When guys were sitting in caves, they wrote on those walls to keep score of, I killed 2 buffaloes, you killed 1, you owe me 1, right? There was no gold then. Money is a ledger. It records the obligations of one human to other human beings. And so it evolved that gold and silver became the soundest form of money for 5,000 years because Bitcoin didn't exist. But Bitcoin now exists, and it's actually deflationary money. Unlike gold, the supply of gold will double in 45 years. It goes up 1% a year. The supply of Bitcoin's fixed. So it's the ultimate deflationary money. And unless you believe the quantum computers are coming along and the blockchain is going to get hacked, you've got an immutable record of who owes who what. And so in a sense, with the next halving, Bitcoin will be sounder than gold. And so I would urge all gold and silver people to rethink their assumptions and to recognize that Dogecoin is a piece of shit. All the other shit coins are pieces of shit. But Bitcoin is actually a technological innovation that's extremely important. And to say you hate Bitcoin is like saying you hate the internet because you're dealing with AOL and dial-up. That's exactly what this is. This is just a new technical innovation. And it's just based on math. And the Bitcoin doesn't give a shit about what your emotions are or what you think. Bitcoin is just a limited supply of spaces on a ledger that anyone can buy into. And these coins, in my opinion, are going to be worth between $1 and $10 million a piece by 2030. I'm absolutely convinced of that. And therefore, with by the way, with a huge interactive, volatility between now and then, which a lot of people say, well, it's so volatile it can't be money. Well, no, it can be money. What we got going on here is the ocean's trying to fit into a swimming pool, and so there are going to be waves, right? It's going to be kind of messy. But the point is that to not own some Bitcoin is, if you're a sound money advocate, you've got that piece of the equation right, to not own some Bitcoin is absolutely insane. It's absolutely insane. And it's not, I've often said, it's not how much you own, it's that you own something, because it's going to go up faster than gold. It already has. It's outperformed gold in its lifetime. And, frankly, the gold market's somewhat broken because of the paper market. And I think we'll break the paper market. And I think with all the devaluation that's coming, gold's going to perform fabulously. So I'm not saying get entirely out of gold. I'm not saying that at all. I'm just saying if you're a gold and silver person, don't be dogmatic about it. Mm-hmm. Recognize that the world is changing and that there's another thing that also helps accomplish the same objective. And by the way, these people who are doing it, a lot of them are kids and they get it. We've got a whole generation of Austrian economic kids who read the Bitcoin Standard, did the research to fully understand Bitcoin and are kind of like, this is great. We're going to take those boomers down because, frankly, they've been playing the system to their advantage and we can't even afford to buy a house. So I'm all behind those kids. I think it's great. It's a truth machine for creating fairness in the world. And it's not about getting rich off of Bitcoin. It happens to be a good place to store your energy, in my opinion. But to me, it's actually about changing the world and making money sound again. And if you dive into it and you see some of the things that are going on, you'll understand what I'm talking about. A very good example of that is that El Salvador just made Bitcoin their reserve currency, and they made it legal tender. And what that's going to do is it's going to allow El Salvadorians, many of whom, first of all, 25% of the GDP from El Salvador comes from remittances. What does that mean? Somebody who's an El Salvadorian comes to the US, gets a job, makes money, and sends it back to their relatives in El Salvador. Okay. Well, the average take on that is somewhere between 40 and 50%. In other words, if they make $100 and send it to their relative, they lose $40 to $50 in the friction of getting it back home. Now, half the El Salvadorans, roughly, I believe, have cell phones. And, all the relatives working up here, even if they're domestic, they have enough money to have a cell phone. So what Bitcoin is going to allow these people to do is basically prevent that 40 to 50% skim. That's not about getting rich. That's about making poor people live better. If you're getting $50 out of 100 because somebody in the middle who's controlling the financial system is ripping you off, and suddenly now you can get 98 out of 100, that's a lot better. That's fair. And so I'm a very big proponent of Bitcoin, and I think people who are in the gold space should be very open-minded to the possibility that, one, this is going to perform as well or better than gold, and that, two, it's part of the sound money crusade, and sound money is what is going to fix our world. Our world is badly broken with corruption, and the corruption exists because those people who control the levers of power throughout the world have all gotten into those positions because they've taken advantage of fiat money and the cotillion effect to become worth silly amounts of money, and then to use that privilege that they've gotten through that to take advantage of people who don't have that kind of power. And it's a very, very important cause in my view. So with that, I will turn the chart over to Patrick, who will give you a very good explanation of why on this, I don't think and I'll agree with him, I don't think on this run we're done yet. I think we're going to go back through the 60 and probably somewhere into the hundreds, 100, as his chart shows, the 100 to 150. And then we'll probably have another correction. But Bitcoin, in my view, will be much, much higher, it'll be higher probably the end of this year. It'll probably be higher 2 years from that. And I ultimately envision something of between, $1 and $10 million a coin. Now that's in 2030, so it's going to take some time to get there. But, people who look at it and say, well, it's at 60, or it's at 30, that's way too high. It used to be at 5 or 6. I missed it. That's like saying you missed Amazon in 2010. There's a lot more coming here, in my view. So I strongly encourage silver and gold people who feel butthurt about Bitcoin to rethink their whole premise. That this is an ally. I'm not suggesting they should get out of gold and silver. They work together. There are a lot of people who are in both. Bitcoin people, by the way, the smart Bitcoin people totally respect the gold and silver investors. We've been carrying the water for a long damn time, and all they're trying to give us is another alternative that helps. And I think it's a very useful alternative. So that's my speech on Bitcoin. You probably didn't want that much, but I know you're going to get comments from gold people who are going to shit all over it, and I really think I think that's unfortunate, because I think they're missing something. I really do.
Just to reinforce that point, Larry, if we're just from a pure standpoint of just trying not to be dogmatic about it and to put another bucket out to soak up some of this liquidity, you have to take a serious look at some of these other asset classes. So Pat,
that's exactly right. And I'm not suggesting you put huge amounts in. You put what you're comfortable with in.
And dollar cost average, right?
Yeah, and you dollar cost average, and because of the asymmetry. Yeah. Mm-hmm. There's a great, I'll tell you this, I'm not involved in it in any way, but there's a great firm that helps you with dollar cost averaging, and your readers might be interested. Just Google Swan Bitcoin. And it's a site that you basically set it up with your bank account, and you can say, I want to buy $100 worth of Bitcoin every week. Mm-hmm. And it just, whatever the price is, it just buys it, and they call it stacking Satoshis. And so price goes up, you feel great. Price goes down, your next buy is going to be cheaper. Mm-hmm. And we all know dollar cost averaging is a pretty powerful investing tool when you've got an asset that's really volatile. So it's worth taking a look at.
Pat, anything to add on this chart?
Well, like a chart trader, you're I could change the logo on top. It could be called bananas, and you always want to try to identify the chart patterns, the support, the arcs, and independently of what somebody could say, I have an opinion. Oh, Bitcoin 30,000 is expensive. Oh, Bitcoin $100,000. That's my target. Well, everybody has like a price target, but at the end of the day, it's the aggregated reviews, analysis of everybody put together that makes the price action what it is, right? Defines support, resistance. And right now, this is Kevin identified these cycles. And I think right now, even if it dipped below, he did put in the comments that if it went below 54,000, that better not dip below too long, go back up. And I think I have another chart that's going to show maybe this one. Right now, when I did this chart, that's a 1 year moving average. So always past behavior in a previous bull run. How did the price action behave? So the reaction points, like a 1 year moving average is a pretty solid cycle for Bitcoin in the first bull run, or that 2019 to 2000. Something's wrong with the scale, I think. But when it went up, always above the 1 year moving average. And when it closed below, then it went hibernation and went sideways. So right now, I think Bitcoin's at 37,000 right now. It just bounced off that 1 year moving average. So if you look at the news and you look at the daily volatility, you have to take a step back, at least on monthly candles for a yearly moving average. And you'll see right now, you're still in an uptrend. I think I have one more chart after this one, which shows where there could be. This one. Okay, we'll do this one now.
Is it that one maybe?
Yeah, let's go with this one.
Okay.
So right now you're above a 1 year moving average. Everything's good. You're pulling back. Should I be scared? Should I drop everything? As long as you're above the 1 year moving average, it's good. And this is I put on the linear scale, so it looks worse than it is. but just amplify a parabolic move above an all-time high. If previously, and I've seen this in the NASDAQ and other instruments, if you correct 70% off a parabolic move, and you need a lot of time, a multiple of that time to do that parabola up and down, you have to multiply that times 5, 6, 7, or maybe 9 times in the future to recuperate, right? Because all these people that bought high, now they're like bag holders, they're going to want to sell every time there's a rally. So right now, Bitcoin is still above its inclining one-year moving average. It's probably getting really close to getting back in Kevin's arcs. And as long as it doesn't retrace all the way to 20,000, there's no reason to think that the pause in Bitcoin will be prolonged that it'll just come back, let's say in 2026, back to all-time highs. So before like judging, of course, on the shorter time frames, you could say, oh man, it's done for. There's a week off distribution tops, and there's all that on the daily time frames. When we take a step back, there's like threshold to hit before it gets to be in severe damage, and it's right on the cusp right now. So we got to let it see how June closes, and then after that, see if it could get a white candle and bounce back up.
Mm-hmm. Let's go back here to your ultimate target here. And Larry, I know you like this chart as well.
Yeah, I do. I mean, it's it's so the other thing I think people need to understand about Bitcoin, as I said, the supply of gold is going to double in the next 45 years. It grows at 1.75% a year. Supply of Bitcoin is fixed, and so it's the one form of money. It's been kind of adopted by some people's money. Obviously, it's not universally adopted yet, but it's trending that way. It's the one form of money, or unlike a commodity, where it does not respond to price. There are only 21 million of these things, period, and some of them have already been lost. There are probably only 17 or 18 million of them because keys were lost on a lot of them. But and so no matter how high its price goes, there's only so many of them, and I don't think people fully understand that creates an exponential function, and that's why this thing's going to go so high. And most people can't get their heads around it. I mean, there are a lot of people. Exponential stuff is hard for a lot of people to understand. And it's a weird beast. I mean, I have to admit, when I first started looking at it, I didn't understand it either. I couldn't quite believe it. But I've been watching it for a long time now. And the more you learn about it, the more you understand it, the more you see what's going on, you see the adoption rate. I was a venture capitalist in 93 and 4 buying internet companies. And this reminds me of the internet. It really does. This is the base layer of money. It's the base layer of digital money, and having a seat at the table of the base layer of digital money when there's a fixed supply of it, it's just going to be an enormously important thing. And there will be stable coins and other layers that lay above it. It's not very good for doing transactions. You can't buy coffee with it. The average price of a transaction is, well, it depends on how fast or slow it is, but it's 50 cents to a couple bucks. So you don't buy your coffee with Bitcoin today. But there's going to be something called the Lightning Network is going to sit on top of Bitcoin. It's going to let you buy your coffee for a 2-cent transaction fee. So, I wouldn't want to be Visa or MasterCard because those businesses are going to just disappear. That 3% spread is gone when the Lightning Network fully rolls out, and it's in the process of doing that. They've just started it. So, yeah, I think it's got an enormous upside. I really do. And I think it's ironic that it's also, you got two things going on here. One, it would have a lot of upside if we just had fiat collapsing, which we do. And of course, that's going to, it's not, the price of gold isn't really going up. What's happening is the dollar is just becoming worthless, and that's driving the dollar price of gold up, right? But the related thing with Bitcoin is that gold's fully distributed. It's been here for 5,000 years. Everybody in the world has it. Everyone knows what it is, et cetera. There's no adoption curve with gold. Bitcoin, 10% of the people in the world know about it or are in it. Maybe less. It kind of depends. It's hard to estimate with certainty. But the point is, and more and more people are gonna know about it. And so what happens? 21 million Bitcoin. There are 45 million millionaires in the world. So not even every millionaire in the world can't own one Bitcoin. Right? So what does that tell you? That basically tell you that a Bitcoin's got to be worth $1 million if it gets adopted widely. Bitcoin's got to be worth at least $2 million, right? If every millionaire wanted to own one, they can't. So it's I got to tell you, it's a very, very asymmetric opportunity, and you can tell I'm excited about it, and it's just as a result of having studied it and watched what's happened here.
And I think
I change my mind as I get more data. And, I was somewhat confident in it, 3 or 4 years ago. And I thought it was intriguing. And, I've watched it unfold. And as the data's rolled in, I'm kind of like, well, and I mean, there are times I didn't like them either, but I was like, look, I'm about trying to preserve my labor and the value of my labor. I'm a low time preference kind of guy. And, I'm going to pick the kind of money that's going to help me preserve it the best, or one of the kinds of money. It's going to be part of my arsenal, where gold and silver are also, an enormous part of my arsenal. So, and I think gold and silver people who ignore it, they're just doing themselves harm. I mean, don't be dogmatic about it. Think about what it really is, and take a small position. If you're wrong, you're going to lose the small position. If you're right, you're going to make multiples of your money, which is what I think will happen.
Yeah.
So. And I think part of your, like, to your point there, Larry, about the adoption curve, is that this news out of El Salvador, and then as we were talking before we hit record, Brazil is now looking at it, and a couple other countries, that only serves to increase the network effect and the usability.
Absolutely. Panama's looking at it. I mean, this is, it's like dominoes falling over. I mean, you've seen one of the big, I mean, I know some of the mutual fund money managers up here in the Boston area. One of the big mutual funds up here did it. They adopted it. They started buying it. And I got, a friend of mine got a call from one of the other huge insurance companies up here and said, God damn it, they beat us to it. They got some, now we got, they got some, now we got to get some. I mean, I'm telling you, it's, it's kind of like a virus. It spreads virally. I mean, and look, it surges and it dies down. I mean, we all remember 2017 when everyone was talking about it on Thanksgiving. A bunch of dumb people jumped into it, drove it up to $17,000, $18,000, $19,000. By the way, I was buying there, and then of course it calmed down, and ultimately it fell all the way back down to 3,800. I doubled down, and so you got to be prepared for that. I mean, you've got to be prepared for volatility. But again, if you look at the charts, each low is, I mean, the low before the run to 19,000 was about 1,000, the base of that was about 1,000. So it did a 20x off of that, and it corrected 80% down to 3,000, 4,000. So, 80% correction. Now off of that 3,000, 4,000, it kind of came up, and it's built a base around 10,000. So if you do a 20x on that, you get to 200. And then we'll probably correct back to 40 or 50 or 60. I mean, I'm not sure, I feel very comfortable. And just so you know, my firm is buying it heavily right now. We think there might be a little bit lower from here, but we're not sure of it. It could touch the 20s, but we don't think it goes below the 20,000 Patrick outlined. And
you don't want it to go all the way down there. I don't think.
Yeah, I don't think it will.
I don't want to sit there.
Yeah, I think we might get a spike down into the 28, 29 if we have a bad. There's an issue going on right now for the people in the community all know about it, is Tether's got problems, and a lot of the money that came into Bitcoin came in through Tether, and Tether's levered, and there are issues there. And also the government's going to come in with some regulation. And so I could see those two things driving it into the 20s, but I wouldn't count on it. So we've been we're kind of dollar cost averaging for the next month or two here, because we think 35 is a very attractive price. And we were buying it at 60. So, on this run, when it gets to 100, 120, I'd probably pass. I think, let's say it goes to 200 on this run, and then it'll probably connect back to 60. I mean, there is you don't want to chase it. You don't want to FOMO it at 250, only to see it correct back to 90, which is, if you look at the pattern, that's what might happen. If it goes to 150 or 250 on this run, it could easily correct 50% off of that. So if you buy it at 150, you got to be prepared to hang on to it at 75. I think my firm will probably stop buying it around 75, for this cycle, because we think it'll probably correct back to that, and off of the next peak. So,
yeah, that's why, like, all those cycles, where could I hit resistance, long-term resistance, man, those are all tools to help when you're too stretched, when you like.
Well, and that's the point. And probably the most important thing here, and this is why for a lot of people, I just argue for dollar cost averaging. You just don't know what these things are going to do. But I tell you one thing you don't want to do is you don't want to buy it at a high. You don't want to buy it at 17,000 excitement and Thanksgiving and sell it at 3,500, only to have it go back to 60,000, right? I mean, that's you got to have strong hands in this stuff, and you got to recognize that there's a big change going on, and you got to recognize that there's enormous volatility here, and so play it, behave accordingly, right?
And I think that's why I really wanted to show that cyclical chart, because again, if we're just trying to think about, accumulating some of this capital that's being poured into the markets, it gives us some good perspective on, very likely it's going to get back there someday.
Well,
if you buy it.
Let me give you another idea along these lines. We've thought of starting a fund with this. It wouldn't be entirely crazy to, say I've got a sound money bucket and I'm going to put, say, half of it in gold and silver and half in Bitcoin, or pick whatever the numbers are. Mm-hmm. Some allocation. I'm going to be 30%, Bitcoin and 70% gold and silver. And guess what? Every month I'm going to reallocate. So in other words, I'm going to look at it a month goes by, Bitcoin went up a lot. Oh, now it's 40%. All right, well, I'll sell a little Bitcoin and buy gold and silver, right? Oh, gold and silver really went up a lot and Bitcoin went down. Oh, I'm light on Bitcoin. I'm going to sell a little gold and silver and buy Bitcoin. So you've kind of got a dollar cost averaging going on where you're, on a relative basis, you're selling the form of sound money that is a little maybe too dear relative to the other one at any given point in time. And you're buying the one that's cheap. Those people, you would have liked to, if you knew what was going to happen, Bitcoin was 17, I should have sold more gold. I doubled down at 3,800. I wish I'd sold more. If I'd been doing it on a percentage allocation basis, I would have bought more. I would have sold more gold, bought more Bitcoin. But in turn, Bitcoin goes on a huge run. It's at 200. Gold hasn't moved very much. Maybe it's time to sell some Bitcoin and buy some gold. So I think that's a strategy that would work pretty well. And I'm actually considering creating a fund that kind of pursues that strategy, because I think it's like balancing the two. Gold to me is analog sound money, and Bitcoin is digital sound money. And, they have different characteristics and, pluses and minuses to both. But I think they both are going to run for the title of they're both going to be sound money for the next 20 or 30 years. They're both going to do very well for the next 20 or 30 years. It doesn't matter. You can miss Bitcoin, you'll do just fine with gold. But if you're seeking alpha, this thing's got a lot of alpha in it. Nobody's, think about historically what this is. This thing went from nothing to, almost over $1 trillion in market cap in 11 years, 12 years.
That could be one of my junior minor penny stocks there. That's a $1 million market cap. That's right. There's also, the leverage in the silver,
absolutely. Yeah. Oh, absolutely. I've got lots of silver and gold stocks that I think are going to cream Bitcoin. There's no doubt. But, everything has risk. The issue with stocks is, and particularly in the mining space, as we all know, is it's not easy picking these things. And there are going to be some huge home runs, but there are also going to be a lot of swing and a miss, and so that's tricky too. The thing I like about this, Bitcoin doesn't have a management team. Bitcoin's just a mathematical formula that's running. And, when I got involved in 2013, and it had only been running for 5 or 6 years, I thought, well, this thing could blow up. In fact, I sat next to a developer at MIT, and it was a core developer of Bitcoin. I asked him, I said, what are you worried about? He says, hey, every time I make a change to the code, I go home that night and I think, oh my God, I've croaked the whole fucking network. And I thought to myself, this is one of the, smartest computer scientists in the world. And he's telling me he's worried about, the changes he makes to the base code might croak the network. And I thought, Christ, how can I put any money in that? Right? But, they're now a lot more core developers. There've been a lot more fixes. They've gotten it a lot further along the road. You've got 11 or 12 years. They've got a backup plan if we have, widespread loss of the internet, et cetera, et cetera. It's, the pieces are getting put in place to, to diminish the risk of that kind of an event. But it's always a risk. It's out there. Look, you'd be nuts to have all your assets in Bitcoin, just absolutely nuts. But, to have zero of your assets in Bitcoin, I don't think that's optimal. I don't think it's optimal.
Yeah. Well, that's where the ratios come, like gold silver ratio. That's where ratios help you situate yourself.
Exactly.
You might cheap versus another asset. It might expensive.
Exactly. No, the ratio analysis is brilliant stuff. It's one of the best parts of the whole technical toolbox. Yeah.
Excellent, guys. Well, I think this was a great conversation about really thinking about different assets to own, but most importantly, sound money and trying to really take advantage of this unprecedented time that we have here. Pat, Larry, anything else to add before we wrap up here?
No, nothing else. Just this transition is going to be hard, and a lot of people get really depressed about it. What's going to happen, how screwed up the government is, the inflation, hyperinflation, all that stuff. All I would say is actually be happy. I mean, you go to the Bitcoin conference in Miami, which I just went to. You meet these kids who are doing this stuff, changing the world. Go on my Twitter feed, look at the Jack Mallers speech. I'll tell you, this generation is going to make this world a better place. We're going to fix this money problem. Things are going to get a lot better. And I have never been so optimistic as I was coming out of this Bitcoin conference. It's very easy for gold people to be, just very pessimistic with how screwed up the world is. And it's really screwed up. But you know what? Humans are very smart. They work hard. Everyone in the world gets up and tries to make the world a better place every day. And it's going to become a better place. It really is. And so, optimism, in my view, is a force multiplier. And you got to be optimistic about how this will work after we fix this problem. But we ought to all work on fixing the sound money problem. That's my strong belief.
Excellent. Larry, tell us where we can find more about you, your Twitter feed.
There are 2 ways to follow me. One, I'm a loudmouth on Twitter, at lawrencelepard.com. I'm not very kind to the central bank, so if you're a central bank fan, you don't want to follow me. And then I've got a lot of stuff on my fund and what I do on my website, which is EMA, Echo Mark Apple or Echo Mark Alpha, the number 2.com. So Echo Mike Alpha, I've got to get my military. Yeah.
And of course, you recently revamped it, and you put out quarterly letters there that are
and they're quarterly letters. You can sign up for that. They're free. We won't spam you. Mm-hmm. I'm all about trying to return the world to sound money. I think it's a really important and valuable thing to do. And I'm trying to make money and protect my investors' capital, but that's not really what this is about for me. What this is about for me is trying to return the world to what I think is a very important standard, which I think will improve human behavior and human outcomes all over the world for a lot of people. And I think it'll remove some of the bad people that are in charge. I could actually see longer term, governments failing over this stuff. And given the way some of these governments behave, I think that would be a very good thing. So, I hope you join me. I hope people listening to this will join us in our quest for sound money, because I think it's a worthwhile quest.
Mm-hmm. And as you say, it applies, and it's more important than just having money or currency. It really goes into the roots of human behavior and how you value different things.
Yeah, I mean, people, in my view, my strong view is that people are entitled to maintain and have the fruits of their labor, and that diluting the money supply, printing money, is theft, and you're stealing people. I mean, all you have with your life is you create money. Money is a representation of your time and effort that you put into the world to make the world a better place. You do that and you get money, and then then you got your government who says no, we're going to take that away from you, and we're going to, in an uncontrolled way, we're just going to dilute you. We're going to steal from you on a regular basis. That's bullshit. Mm-hmm. That's absolute bullshit. And then it leads to corruption in the government. So they set up systems so that they make it even easier to steal even more, and so that they can change the short selling rules in September of 2021, and they can bail out the bankers and then pay record banker bonuses soon thereafter. I mean, people think this is a red-blue issue. It's not. This is a fairness issue. It's not. I mean, they love the fact that they got red and blue fighting with each other. What we got to fight is we got to fight the bankers. We got to fight the bankers and the Fed and the system, the monetary system. They've stolen part of our lives from us, and we've got to get it back. Mm-hmm. And it also goes to the issue of freedom. We've got to get personal freedom back, and having sound money increases our odds of having personal freedom. It reduces the odds of socialism, it reduces the odds of communism, it reduces the odds of collectivism, all of which are evils because we've seen what they've done to countries. So it's an important thing in my view. It really is.
Excellent. Pat, anything to add here as well?
Well, it was just an honor and pleasure there to listen to Larry talk and just to participate in all of this there. It's I'm from the chart world, but the charts it woke me up, and that's when I had to learn about the precious metals complex and stuff that we think we know in the background, like sound money, but then you go back in the rat race. And then I told my girlfriend, Jesus, I'm making less real money than in 2006. She said, what's up with that? I can't even afford a new house. I can't even afford the old house I had. Right. I said, babe, I'm in a fight against inflation, and it hasn't even started yet. Something doesn't make sense.
Exactly. But here's the good news. And I mean, not to be trite, but they say that at the show all the time. Bitcoin fixes this. It really does. Gold and silver too. Sound money fixes this. Sound money fixes it. It's going to make your life better. And it's, we got to all band together and fight for sound money. And we will, because we're smart. And we, once all we got to do is spread the word. I mean, there's nothing like an idea whose time has come, and the time has come for this stuff. And so we're going to, it's going to happen. It really is. So be optimistic. It's good stuff.
Enjoy the journey, guys. Enjoy the journey.
Yeah.
Thank you very much, Tom, for allowing me to climb on a soapbox.
Not a problem, Larry. It's again, I just try to provide a platform to encourage discussion, encourage challenging our assumptions, our ideas, and really try and help people, make some money and combat inflation.
That's the thing. I mean, I want to see people, defend themselves. I hate seeing people get taken advantage of. And, this is the way to defend oneself, in my opinion.
Absolutely. Pat, of course, you and Kevin Wadsworth at North Star Charts have teamed up for the website North Star Bad Charts. Of course, your Twitter handle is @BadCharts1. Kevin's is at North Star Charts, and your guys' website is excellent. Tell us a little bit about it.
Well, all these charts you saw and some of Kevin's charts, we're putting them all on that platform over there. So we're on Twitter, still posting charts there. But if you want to see all the charts, just sign up to northstarbadcharts.com. We kept it like dirt cheap, but eventually, we have so many requests, we're running out of time. But it's a nice, handy place there to rapidly find good, hopefully high value charts that could help you make better decisions.
Excellent. Gentlemen, thank you so much for your time today.
Thanks, Tom. Take care. We'll see you.
Thanks, guys.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.